Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. And welcome back from Labor Day. Hopefully, everybody was safe with their friends and family. So, back into market action this week. Tomorrow, we've got the JOLTS reporting tomorrow, job openings at 10 a.m. That could definitely provide some volatility in the market. But then, most importantly, Friday, we have unemployment reports hitting the markets pre-market at 8:30 in the morning. Mark your calendar for those. Plus, this week, we've got some earnings. We've got AVGO on Thursday. That's going to be the biggest one Thursday after hours. But then tomorrow, we also have Hewlett Packard, AI, and as well as Salesforce, CRM. So pay attention to those. Now, into the market today, the market did gap down lower and then did fight itself to come back, particularly at the end of the day. We're going to get into the intraday price action here in a moment. But first, let's go into the market summary board on this down day in the markets. First off, we see here Dow Jones down 0.66%, NASDAQ down 0.93%, S&P 500 now down 0.89%. U.S. oil, nice pop here on U.S. oil, up 2.53%. Gold making brand new all-time highs, now over $3,500, up 1.67%. Bitcoin had a nice bounce off that trend line that we've been targeting for the past several weeks. Finally hit that over the weekend and is now up 1.29% for the day. Great move for that particular cryptocurrency. Into the S&P 500 heat map we go. We see Nvidia down 1.86%, steep fall there for it. Apple down 1%, Google down 0.63%, Amazon down 1.45%. AVGO is bucking the trend, up 0.33%. Cisco down 1.9%. And we see a lot of other red here on the screen, including Tesla down 1.39%. T-Mobile, though, up 1.52%. In general, decent red day in the markets, a few greens here and there, but a lot of red on the screen. But it wasn't really that big of a sell-off. As we see here in the S&P 500 on the daily chart, we gapped down under where current price was closing last week. And then also notice, here's a simple trend line providing analysis on the current trajectory of price. And you notice price gap down underneath this trend. That's not a good sign for maintaining trend and maintaining this upward trajectory. So that's deviating from the current trend, albeit still in the previous chop. This is certainly a significant change. Now let's flip into the 10-minute chart so you can get an idea where we're tracking price and what likely is going to happen next. So we look back here on Thursday, we had a beautiful 10-minute topping tail, and we even had an hourly topping tail at the end of the day there to close. That did imply that we were about to have some downward pressure, and that's exactly what happened on Friday. We had downward movement and then sideways price consolidation. This is a technical bear flag. This is a beauty. This is exactly what bear flags look like, and the result of bear flags is further downside. So we had that further downside today, and then today, if you notice, we put in some sharp selling pressure right up until about noon, and then after noon, everything alleviated. Buying pressure hit the markets again. We actually had a little cup and handle pattern that is starting to play out and push higher on the charts. This could push us back up into the 6,400 range on the SPX. So be watching that for potential move tomorrow. But near term, this pattern is actually more bullish than bearish, but longer term, if we zoom back out, we are breaking trends. So mainly what this is telling us is we had a move down. We didn't confirm under this trend line, but we likely are going to start marching back up to attack this trend line in the near future. Like I said, around 6,400 to 6,500 on the SPX is where you're going to find the most immediate near-term resistance. Into the Qs, we see here the Qs did gap down underneath this longer-term trend line here on the chart and have since now bounced right back just like the S&P 500. So it's done its job to secure a place and not break down any further, but it is not off the table for more downside pressure. First immediate resistance will be this trend line right at 568.63, but then gap fill is not far away, just above that at 570.40. Next up, the SMH. Now, notice what I've got drawn here on the chart. This is not triggered yet, folks, but we do have a head and shoulders pattern that is forming. You can see here Friday's price action didn't quite complete the right shoulder, but today's price action absolutely completed the right shoulder of this potential pattern of a head and shoulders. This head and shoulders, why it's so pivotal, and critical to display on the chart is that it comes with a measured move target all the way down here at 259.50. Now, if you look back on the chart, does that make sense? Does it make sense for price to break down and come here under the 260 level? Well, absolutely it does. If you go back on the chart, look at all this consolidation, then also look at this pivot here back on the chart, all of which correspond right there in that area, which would be a very good target and also support area for a potential bounce up. And just remember what happens usually when price action breaks a significant trend line, being this neckline, price usually sells off, catches support, and then bounces back up to retest that trend line. That would be an ideal area right down here at the 259.50 if we get a big sell-off going forward in the future. But keep in mind, we have not yet triggered. Price action needs to come down under this neckline in order for this head and shoulders pattern to be initiated. So we'll be watching this closely in the next couple days. Into the IWM. IWM, as you see here, Thursday and Friday last week, did get rejected right here at this 236.63 resistance. That's still resistance if we were to move up on the charts, although it will be minor since we did tag it and try to get it for 2 trading days. We did not get above nor close above this level, so that will be the area of contention to move up higher. Ultimately, still nice consolidation. Great price recovery here on the IWM today. Still looking positive for at least the very near term on that chart. Next up, Bitcoin. Now, guys, we've been talking about this, and I even mentioned it just a little bit before. I've been talking about this declining trend line right here. That was the neckline of the inverse head and shoulders pattern displayed right there on the chart. I've been talking about how this 107.300 to 107.400 area was going to be tagged. It was just a matter of when. And I was even saying that too when price was all the way up here. I was like, wow, we did make new highs. We didn't really close and make a confirming new high. So I'm still targeting this area for at least a minimum pullback for Bitcoin. We accomplished that feat. Now, where are we going to go from here? So now we're starting to bounce up. I'm paying attention very closely to this big red candle that took place on Friday. This big red candle will have resistance at the top of it, roughly $102,611. Notice where that also corresponds, the 50% area of this parallel channel. So that area right there will be the most near-term resistance. Should we get above that, this next trend line at 114,662 will be the next target for resistance. On the downside, should we break this, we are going to be coming down to this bottom end of the parallel channel, right around $103,000 on Bitcoin. But you can see here, we had 3 days of consolidation. That was almost implying we were about to start forming a bear flag, which would then point to further downside. Today's price action is bucking that trend, all still staying within this red candle, which is why I'm still very focused on this red candle for the most near-term price action for Bitcoin. Now, into gold. Now, we did discuss this the other week, right on Thursday, my last Trading the Close episode. We were talking about how this area, these trend lines would be the next area of contention for price moving up. Friday, we battled through that area. And as you see here today, we gapped up and went higher. Now, why are we going higher on gold, right? Well, the S&P 500 is pulling in. And then we also have added uncertainty with these tariffs. So last week, we found out the judge ruled, one of the judges here in the United States, that the tariffs that Trump laid out apparently are not legal, or at least some of them are not legal. So there's another battle in the court systems, leaving us as investors with uncertainty. What happens when folks are uncertain in investing? Well, they go to places of safety, which is gold. So gold is marching up on the charts, putting in a brand new all-time high, really significant, especially folks, because we have a topping tail right here that looks like price is going to close above today. That now negates this topping tail, but in order for this continued momentum to push forward, we need to see another move up tomorrow above where today's close action is. So if we get that, then we're marching not much further up, about $100 more to 36.21, as that'll be the next resistance area on the charts. Be watching for that on gold. Silver also had a fantastic day, exploding up on the charts, getting above this long-term inclining trend line that you see here on silver. This trend line goes all the way back to 2023, and price action is now accelerating up to and above it. That puts my next target for silver up here at $41.66. Again, this is one of those charts I've been talking about for a long time. And so far, all through our analysis, it has marched right along, hit every one of these levels we've been discussing, minus this one, of course. But still, Amazing movement on this chart of silver if you've been following me for the past several months. Next up, we've got U.S. oil. U.S. oil, another massive push on U.S. oil today. Great move for it as it's starting to fight to get out of all this negative sentiment down here and bearish consolidation. Still, though, it is still consolidating and moving down at the bottom of the chart. It still does imply further downside is on the horizon for oil. One way that that can be negated is if price action gets above this declining trend line, right at $68.17. If we have price action trading up in this range, then that would open the probabilities for price action to move higher. Since we have both of these large, big red candles moving down, and then this big red price action coming down, all of that red selling pressure is going to be dominating the forward momentum on U.S. oil. So we'll see where U.S. oil goes in the near term as far as touching this trend line. I still, even with today's push up, I still am anticipating U.S. oil to come down here near the $58 range on the charts. Next up, nat gas. Nat gas, as you see today, had a good day, but it was very similar to where price action was just yesterday on Monday. Now, that was opened while the rest of the markets were not. But you see here on Friday, we did Friday have a close above this horizontal trend line, roughly right about $3 on the chart. This close above was very significant as it's allowed price to maintain right above this trend line for the last couple trading days. That does imply we're going to be going a little bit higher on nat gas in the near term. My support at 255 was not tagged. That's okay. But that would have been a fantastic level, especially if we would have had accelerating selling into it. For the upside potential on nat gas, next resistance is right here, $3.29, located with this inclining trend line on the charts. Next up, 10-year yield. You can see here over on the last part of the week, last week, we did have price action on the 10-year coming down, testing the bottom end of this inclining parallel channel. And then since today, got a nice pop up and has since been saved from breaking down lower and achieving this measured move target of 4.095%. Interesting. We'll be watching this over the coming days, especially once we get the jobs report on Friday. What is the 10-year going to do in response to that, as the jobs report is a major component that the Fed uses when gauging when to cut or raise rates. Next up, Nvidia. Now, I bring up this chart. We discussed this at length last week, but I bring this chart up just to show you how trend has now changed. Now, we could easily come right back up and start trading up, even making newer highs on Nvidia, but notice the price action here and what happens when price does drop back down on the charts. You can see we have a trend that was clearly broken here, and then we actually moved further today, solidifying this break. We attempted to do so here, and price just kept saving itself, and it couldn't do it any longer. So normally when these sort of trend lines break, you can anticipate Nvidia to come right back up, test this inclining trend line. If it does that, it would be at brand new all-time highs, right at 185.58, all the way up to the top of the parallel, right around the 188 to 190 figure. That range will be significant resistance on the chart of Nvidia, since now this trend has broken. So keep that in mind. Support levels displayed here at 161.39 and 147.10. for when price hits there and gets rejected. Those would be the first levels of support. Next up, we've got GEV. Now, GEV, this is a perfect example. Just like Nvidia, you can see it was just starting to break down right here, right? Now, GEV broke down here, and then this is what I anticipate to happen potentially on Nvidia. Notice with this trend line from pivot to pivot to pivot, and then this last hit, we broke through, and we retrace to that trend line, and then look at this monumental sell the last few days. Now, GEV was a hot stock, especially when we're talking about building out all these data centers throughout the United States for the further development of artificial intelligence. So a lot of investors were piling in because a lot of contracts were getting signed for GE Vernova to provide power to all of these data centers. So a lot of money was going in here, both in the stock as well as in their company for these prolonged contracts. Well, the AI data centers aren't done being built yet. So any pullbacks can be great buying opportunities for continued upward momentum on GEV. You can see here, we had a topping tail at the top of the chart, implying price was going to come down. We even had a break and a retrace that also is telling prices coming down, both negative signals on the chart. So need to find support. Next area of support to buy is at 552.17, followed by 514.92, both of which areas could be interesting entries to start on a long position for GEV. Next up, Affirm. Affirm here, as you see, we had earnings last week and they hit the markets Thursday after hours. Friday, price rocketed up, creating a topping tail. And look, it's reversed nearly 20% from the highs just on Friday. Incredible price action, a lot of volatility here on Affirm, but this is all in technical analysis. The beauty of drawing just a couple trend lines can help you get to a target. If you notice here, this major pivot back in December of 2023 connected over to a major pivot here on February 18th of this year. And then notice where price action stopped there. Now, this exact price action was at $96 and roughly 75 cents where that trend line was. Notice how price reacts when it gets to that trend line. It even pushed through, getting all the way up to the $100 even number before reversing course and selling straight back down on the charts. Now, the next area of support on Affirm, it's going to be minor. It will correspond with this gap fill, which is roughly at $80. And it's going to be right here on the chart. Should we get there in the next couple of days? That would be minor, potentially a day trade opportunity there for Affirm. More longer term level of support. Again, just keep in mind how price action reacts when it breaks a long-term trend. And we can see here, this is a long-term trend line, right? Price action broke above it. What does price like to do? It usually likes to come right back to the trend line it just broke. So notice that we have this trend line drawn out. Here will be the support area for a potential buy to go long on Affirm with this declining trend line roughly around $63 to $64. Now, KHC made an announcement they are going to be splitting into two different companies, and investors did not like that one bit. You see stock price sold off steeply today, down 6.97%, big red candle on the chart of KHC. All right, so where is support on KHC? Well, if I go back out on the chart, you don't have to go back too much further. We've got all-time lows right here down at around $20 on the chart. So I've drawn a trend line over to the most recent pivot. And then you can see here that we've got significant support right down here, $25.70 on the chart. So we'll see if price action gets in there tomorrow. It's not that far away, about 30 cents away. So we'll see if that area can produce a nice level of support for a reflex bounce up. Levels of resistance up here at $28.63, followed by $30.60. Next up, Macy's has earnings tomorrow. So let's take a look at this chart and where potential price action can go. So we have a longer term trend line extending from the top pivot back here in March of 2024. And it's extended down, connecting this pivot high, cuts through these pivots. An upward target for the most near term for Macy's, should we have good earnings tomorrow, it's going to be right around $14.23. Maybe even potentially a pierce through that area. To the downside, I do like this inclining trend line. You can see that area of support right around $12.65. Ultimate bottom floor support down here at $11.42. So be watching those for Macy's. Also, Dollar Tree has earnings tomorrow. You can see here a very clearly defined resistance level above where current price action is. Again, generated from a declining trend line here on the chart. You can see this has been hit once, twice, 3 times, 4 times. This would then be the 5th attempt. So if we get a solid report and also get up into that resistance level of around $120.73, after a day or two, this easily could start pushing higher, since we have been hitting on that trend line several times. Now, if the earnings report disappoints, first level of support to watch is 96.60, but then the bottom area to watch and basically the floor, and I don't think this will get there anytime soon as far as the day after earnings. It probably will take several days to do so, but you'll be looking around a pierce of $80, right down at around $79 on the chart. Next up, we've got Ethereum. Now you can see here, Ethereum, this has been one of the hottest cryptocurrencies in the past few months, as it's pushed up and now tagged new highs over here on Ethereum. Beautiful push up and pierce of the previous all-time highs. Since it did do that, you see prices now retreated on the charts and also is starting to break beneath an inclining trend line. Now it's caught support right here at the 42.84 level, and it's also consolidated sideways. But today's price action candle getting underneath this inclining trend line is implying we do have probabilities pointing towards a little bit more downside. Now, this bearish consolidation and a break enhances those probabilities. So we'll see what price action gives us tomorrow. If price is able to fight to get back above that inclining trend line, that will then slightly shift probabilities to stay a little bit more upright in the near term. So we'll be watching this very closely. It's almost on the side of a cliff. Which way is it going to go? Is it going to fall off? or is it going to get some gripping and save itself and start pushing up a little bit further on the chart? Ultimately, though, a level under 4,000 at $3,800 will be the next major level of support on Ethereum should price start coming back down. Now, and lastly, we've got Cardano. Now, Cardano is one of those cryptocurrencies that really hasn't received a lot of attention, especially like the way Ethereum has on the charts. As you can see here, Cardano has attempted now 3 times to get above this inclining parallel channel, and each time has gotten rejected. Also notice over the weekend, we did have price action come down and get very, very close to this 50% area of the parallel, which is roughly right under 78 cents. It got as low as 78.2 cents. So in essence, kissing this level of support, and look at the nice reflex bounce up that you're seeing, at least for today. Also, this is basically a retrace to where price broke out. So we've gone through that now 3 different times on today's show. For folks and viewers at home, you've got to be taking notes on this stuff. I give you these patterns and I repeat them many, many times for a reason. It's because these patterns repeat over and over and over again. Notice when price broke out of this trend line, came right back, gave us a buying opportunity. These trend lines give you so much information to keep on your chart for when price retraces. Now you have actionable content, actionable information so that you can make some money investing on your own in your own portfolio. All right, guys, that wraps up Trading the Close. Thanks so much for tuning in. Don't forget to like and subscribe so I can bring you more content each and every day we have this show. Can't wait to be back on here tomorrow with a shortened week. So we got to get a lot of trades in and make some good profits. So be watching you tomorrow, guys. Until then, take care.